All right, what is up, tycoons? Super excited for today's video, giving you guys an update on TLT. Right, this is the 20-year Treasury bond, and what we're doing is really just breaking down this five-wave pattern that we've been following and watching pretty much this entire year. Okay, it's going to be this A, B, C, D, E. All right. Now, if you're new to the channel and this screen looks really confusing, just stay tuned. We're going to break it down and it's going to be very simple. And we're actually just going to take a look at how everything has played out in the past accordingly and how things could repeat themselves, but it's not guaranteed, right? So we may end up seeing a change and a break of a pattern. There's a few key signals and key areas that we're watching on the chart right now. So make sure to smash the like button and subscribe to the channel if you guys are new, because I'm doing viewer requests every week. So if you want to see your ticker, your stock, crypto, bond, whatever it is broken down, I'll be happy to do that for you as soon as I can. All right. So typically in the the wave one, the wave three, and the wave five, all right, your A wave, your C wave, and your E wave are the strongest and the most aggressive. Okay. And those are going to come in five wave patterns, right? So if we come over here and we take a look, okay, in red, we have our five wave patterns, right? And so we have our, our impulsive move to the downside for the A wave. We have one, two, three, four, five, okay? And then you get a corrective wave or a correction wave, right? And that's going to be your A to B wave. That's going to be your wave twos and your wave fours, okay? And you see you get an A, B, C, all right, taking us up, all right, to the top of our wave B right there. And then we get another five wave move to the downside. Okay. So we're just tracking it and just showing you guys what's been happening. All right. We have our one, two, three, four, five. And then we get our correction wave, right? So remember the wave one and the wave three, your B to C, those are going to be your five wave aggressive moves. And then you're going to have, your correction waves, your three waves, right? And so we've already pretty much made our A, B, C right here on this corrective wave. So we're going to see there's two possibilities, right? We could pull back, all right, and come back out and really try to break out of this pattern and create a five wave, all right, an A, B, C, D, E out of this, or we could be topping out at our major levels that we're watching, which are the 61.8 retracement level, the 50%, and the 38.2 retracement level. Now you use those with the fib tool over here. And just so you understand the reason why we look at these levels, if we look at the chart, okay, and all you're doing is you're seeing if there's going to be a retracement and then continuation of the trend, right? So what we have is our first example here of when the downtrend really started, right? We take our swing high, connected down here to our swing lows, okay, and we see we have move down, then a healthy retracement, and then a continuation of the trend, right? And we take our highs to our lows again, and we see we have a move down, a retracement, and then a continuation of the trend. The 61.8, the 50%, and the 38.2 are the three most common retracement levels, and the ones you need to pay the most attention to. Those are the ones that people are paying the most attention to as well. All right. So you can see each time too that we, it lines up with our Elliott waves too. Okay. We have your wave one down, then your retracement up towards the 38.2, and then you get the move down, right? And we can see that we've really just been repeating this pattern of hitting our retracement levels, okay, and then ultimately continuing the downtrend, right? So if we connect the high up here down to the low down here, you see we get a move down and then a retracement and then a further move down. So what we're doing right now is we're currently seeing, are we going to get a reversal or a trend continuation? We have our swing high up here connected down to the swing lows. So we have our C wave down, we have our D wave up retracement, and we're currently above our 50%, right? So in the last video, I said that these were going to be the areas to really watch out for, 106, 109. We'll go into the relative strength index down here and then also the MACD. These are really going to help give you some tools and really, just sharpen your skill set by using these. Okay, we'll go over that in a second. But one thing we do need to do, all right, currently, since the last time we looked at the chart, I added a couple things to it. There's some gaps we really need to pay attention to. So the gaps are going to be those blue boxes. And this was our previous high when we were up here. Okay, so we need to go up here to our newest high. All right, and we have our retracement levels right here as well. So when I started the video, I said we end up getting an A, B, C, D, right? And so D would retrace back into our uptrend retracement levels from the most recent low to the most recent high. If we come up and we do pull back, all right, we need to be cautious that this isn't a fake out, okay? Because if we end up finding support between 98.5 and 101.81, all right, then we could end up getting our D wave right here and then get an E wave further, right? And we're really in a big indecision zone right now. Okay, now we did just break a major trend line. This trend line, this white dotted line trend line, you can see really since the start of our 5 wave move down, we've been rejecting this trend line. We actually just got a rejection, okay, and then a breakthrough right after that. And it's pretty bullish. Now, the gaps down that we have, if you don't know, gaps tend to fill about 90% of the time in the market. But there's one big question. The question is when, right? Nobody knows the time when it will fill. So it's really good to just have them on there because, the price is going to be naturally drawn to those areas. And right now, we're very aggressive. We're taking a look at our relative strength index. It shows that we may be able to continue and push higher, right? And even if we come up past the 61.8 at 109.72 and come up for the gap fill right around 110 to 111, that's still a D wave. Okay, that can still be our D wave up, and I would be careful that may be where we see the reversal if we just keep getting a little bit of continued bullishness. Now, before I hop in there, I want to go to the Discord real quick. And what you can do is you can actually come in here and search, TLT in the Discord, and it'll pull up all the data there, right? We have tons and tons of Intel data bots that are in there. So the first thing I want to notice, or mainly the main thing, is that it's been very, very bullish, right? We've had the bullseye spitting out tons of HYG TLT plays. Okay, we have a large call sweep option right here. And this was $480,000 worth of premium, right, on call options for TLT. Then we have over here, we can see again, we're seeing some more bullish activity right here on TLT. We had $5 million in TLT calls right over here as well. And then what else? Just even on the breakout chart, right, it's showing TLT is breaking out. We have more option sweep orders, big amounts. Okay, $386,000, $414,000 TLT breakouts right here. And that's been going on here recently, right? So we're seeing tons of bullish inflows. Once I start to see some inflows change and some more bearish inflows come in, through the various intel and data sources, then that could be a signal. We're going to go ahead and take a look at that relative strength index now, like we were, and we are overbought currently, right? But I want to highlight just in the past what it's done when we've been overbought or near overbought on the chart, right? It doesn't mean that it can't push higher. Okay, if we took a look right here, we were near overbought. All right, we did end up getting a pullback, but then it was just ultimately to go back higher. Now here, all right, again, we're overbought at the same levels, right around the same level, and that was really when the downtrend started. So the relative strength index hasn't been too good of an indicator to suggest further bearish activity. It is something to pay attention to because it is on a lot of people's radars that currently TLT is overbought. But here's a good example in the past when we were overbought 3 or 4 times, and each time we just had a slight pullback to continue going higher on the chart itself. So, while I am looking at the relative strength index, that's not the main thing that I'm looking for a sell signal, right? Or a possible indicator of some bearish activity. What I'm going to be looking at is the MACD. So if we take a look at our MACD now, and I'll go ahead and make the MACD a little bit bigger so you can see a little bit better, but you're going to be looking for your blue line to cross below the orange line. All right. So if we look currently right now, all signs are a go still. We could pull back and, the relative strength index could drop and this could drop as well. As I suggested, if we come back down and then push higher, that could try to break us out of this pattern that we've really been following and this trend that's really been working. But the signal is going to be once you get your MACD cross below the orange line, that's going to be your MACD sell signal, and that's been a lot better indicator, right? If we look right here, this was a MACD sell indicator right over here at this time, and we can take a look, and there was a sharp drop over 20%. Right, even right here on some shorter drops, okay, we have a MACD sell signal right here, and we end up dropping 5%. Over here, we have more MACD sell signals. We'll go ahead and keep measuring these. But we ended up getting one right around here. Okay. And boom, we ended up dropping 15%. And you can go on, and that's what we're doing real quick is just giving some examples of each time we've had the sell signal. So boom, we get a sell signal over here, and we end up dropping ultimately 20%, right? So, these have been much more valid, and really the start of the whole downtrend was indicated by a MACD sell signal right over here. Okay. Once we really got this crossover right here, that's when the downtrend really started, and we've just gone lower and lower each time. So that's one of the main, indicating tools that I'm looking at to paying attention on, where the market can go is going to be this MACD right here. If we get that bearish crossover, then that might complete our wave D up. So remember, all of this was just 1, 2, 3, 4, 5 ultimately to keep heading lower. We do have an ABC right here, this C wave. All right, this we do have our ABC corrective wave. And those the corrective waves tend to be 3 waves. So if this ends up turning into a 5 wave, we could be trying to start a new trend and a new pattern and voiding and breaking out of this. Okay, so we have the gaps up. All right, we have a gap down. We really could go in either direction. We could come up, fill this gap, and then ultimately come back down and complete our wave D right here. Or, we may be trying to start something new, all right, and going for a 5 wave bullish pattern. Now we can reverse technically anytime, as we already are in our 3 main retracement levels. So, right now is a good time for some patience, and really just to watch the charts and let the charts develop and come to you. I wouldn't try to force anything right now. It's not a very good time to go bullish, right? Because generally it's not a good time when you are buying and going long when you're overbought, right? We've looked in the past, you can go higher, but there's usually a pullback. And if you're getting call options or futures or things like that, you may trigger a stop loss on the pullback that ends up just going higher. So, lots of good stuff going on in the market. Hopefully you enjoyed this video. If you did, don't forget to smash the like button and subscribe to the channel.